Hey traders, welcome back to this channel. In today's video, I want to introduce a new indicator called the Donchian channel. Now, if you read the book Turtle Traders by Richard Dennis and how he started an experiment to train up traders using this trend following strategy, you'll know that what they actually did is they actually came out with this indicator called the Donchian channel indicator. So let me just introduce to you what this Donchian indicator is and show you how to use it. Okay, it's a very powerful indicator if you know how to use it. So in today's video, I want to show you what it is and how to use it. Now, the Donchian channel, if you want to use it, the first thing you want to do is you want to come over to Trading View. Okay, this is a free indicator. So the first thing you want to do is you want to click on this indicators and strategies, and you just spell it out. All right, Donchian channel. Just click this one, and you should see an indicator such as this. Okay, the length, just put it at 20. Let me just explain to you how does this indicator work. Now, 20 in this case is referring to the high and low. Okay, so it's a Donchian channel. So of course, in the channel, there's the upper band and there's the lower band. So in this picture, or rather in this chart, you can see that there is the upper band and a lower band. So this upper band, if you put it at 20, that means that this is the 20-day high and this is the 20-day low. So rather simple, it functions very similarly to the Bollinger Band, but it's slightly different. Okay, Bollinger Band is more like a volatility indicator, but this one is more like a breakout indicator. Okay, so it's a very powerful tool, right? You can use it. You can use it into your trading strategy. It can help you to filter out your trades. Use it as entry trigger or to manage your trades. Okay, I will go into each of these users in in this video. So earlier on, I was saying that this Donchian channel, 20, okay, if you set it at 20 over here, the length, that means that you are trying to plot the 20-day high and the 20-day low. Of course, as price move, it is going to reflect the difference. As price move, the high and the low is going to change. Now, this is what the original Turtle Traders did, right? The team by Richard Dennis, that's what they did. Okay, so this is the indicator they created. It's a very powerful indicator that you can see it as a kind of like resistance and support. Okay, it can act as a dynamic support and resistance level when you trade as well. Okay, the next thing that you see in this indicator is you also see this orange line. Okay, this orange line is a very simple, how they get it is very simple. It's just the average of the high and the low. Okay, so if you do, something like, let's say you draw a box between here to here, you'll find that the orange line is sitting in the middle of the box because this is the middle of the range. So this is how the indicator is derived. It's a very simple indicator, okay? But nonetheless, it is a very powerful indicator if you know how to use it. So in today's video, I want to go through the 3 uses of this, how you can actually use it. So number 1, you want to use this indicator to filter out your trade direction. Okay, a lot of you struggle with finding the trade direction, but I know it's not easy. Okay, especially if you're new. Some of you watch our videos and you know that our market structure is important, but you still struggle to identify the direction. Should you be buying? Are you in an uptrend? Are you in a downtrend? Are you in a consolidation? You do not have the experience yet. So that is perfectly fine. Okay, that's part of trading. It takes time to develop the expertise. So this indicator will help you filter out your direction at a glance. Okay, what you want to do is you want to ask yourself, let's look at price somewhere around here. You want to ask yourself, is price above or below this middle orange line? Okay, so as a general rule of thumb, if price it's above it, okay, let's say this area is price above, you only want to be buying, okay? You do not want to be selling. So at a glance, you know that, okay, I should not be selling. The trend is up, right? Any selling is actually counter trend and you shouldn't be trading counter trend if you're not yet profitable as a trader, okay? It's very simple. I think I said this many, many times. If you're not profitable trading with the trend trades, there's really no reason why you should be trading counter trend trades, okay? By the way, if you're enjoying this content so far, really appreciate if you could just like this video, right? Hit the notification bell and the subscribe button because we are on a mission to impact 100,000 traders and we really, really appreciate if you could just help us to get there. Okay, so leave a comment down below to let us know if this video is useful, right? If there's any other content that you like, because we want to create content that helps you. Okay, don't just want to create content that we think is important, but we want to create content that addresses your problem and help you become a better trader. Okay, so the first thing is you want to filter out your direction, or rather the first use of the Donchian channel is you want to filter out your direction. Okay, this is very useful if you do not you can't tell the market structure and you don't really know what to do. Okay, so as a rule of thumb, if price is above, think of it like a moving average. If price is above the moving average, or in this case, price above the orange line, then you want to be buying. If it's below, you want to be selling. Okay, that's just a general rule of thumb. Of course, if in this case, you know, we are in an uptrend and you know price is below the orange line, then you would still want to be buying because the market structure tells you to buy. But this is a very good filter to just tell you at a glance. Okay, so this is assuming you know you are not too experienced yet, you can't tell the market structure, then this is a good tool to use. Now, the second way to use the Donchian channel is as an entry trigger. Now, before I go into details about this, I think it's very important to mention that please do not just trade off the Donchian channel. Okay, what do I mean? Let's say, let me just find an example. Okay, let's say you see this scenario and you say, oh, price made a higher high than the 20-day high, and you just buy. You blindly buy. Okay, please do not do that. Indicators are not meant to be used this way. Okay, if you watch our other videos, we talk a lot about identifying the overall market context, right? We have a 3-day trading guide. The link's in the description. So in that 3-day trading guide, we share a lot about the MPE strategy, where you first identify the market condition, you look at the price level, then you look for a trigger. Okay, that's the way you should approach the market. Okay, at the bare minimum, you need to look at these 3 things. Okay, do not just look at the indicator and say, oh, price made a close above the 20-day high and just buy. Okay, please try to understand what I'm saying in this video. All right, if something is not clear, just leave a comment down below. I'll address it. I'll do my best. Okay, our team will just look through all your comments. But please do not use this indicator blindly and say something like this. Oh, there's a breakout of the 20-day high, I'm going to buy straight away. Okay, you do not do that. Okay, you want to apply it in the right context. Okay, so let me show you an example, right, of how we can use this in the right context. Okay, so let's say in this case, it's very obvious that the euro dollar, let's say somewhere around here, let's say we are trying to enter somewhere here, it's very obvious that the euro dollar is in the uptrend. Okay, no matter how you draw it, you have a high, you have a low, and then you have a higher high and a higher low. Okay, if you do not know what I'm saying, right, this concept of high high and higher lows, please watch our other forex videos, or please get our day trading guide. All this is covered inside. Okay, so it's in the uptrend, so your buyers should be to buy. Now you have prior resistance over here. Okay, this is your market structure, and you notice that on this candle over here, let me just clear this so it's clearer for you. On this candle over here, you can see that this is a very good entry trigger. This is a very good breakout trade trigger. Why? Because the trend is up. So if your market condition is up, you want to be buying, correct? That's logical. Now, that's part 1 of the equation, MPE, okay? Market condition is up, so you want to buy. The next thing you look at is level. So you can see that this was prior resistance, which was broken on the day chart. It's broken. So price level is here, and then the last thing you need, E, is a trigger. So in this case, your trigger is the breakout of the Donchian channel high. Okay, so you can see that this was around the 20-day high and price broke it. So this is how you can actually use it as an entry trigger. Again, I'm going to remind you that you do not just want to blindly enter. You don't just want to buy every time a price makes a new high. You know, for example, if you buy over here, you would have lost money. Okay, you want to identify the overall context, right? Look at the higher time frames. Okay, trading is not so simple. Okay, you need to do a lot more than just using an indicator and just blindly trading. Okay, so that's how you use this that's the second way to use a Donchian channel. Now let me just go through the last one. Okay, let's say you entered the trade over here. You can also use a Donchian channel as a trade management tool to manage your trade. So let's say price keeps going up. What you can do is you can monitor for price to break below the orange line, which is the average of the upper and the lower band. Okay, if you want to be more conservative, you could have exited somewhere here when price broke the orange line, somewhere around here. Or if you want to be more, relaxed with your trade, you want to give your trade more room to breathe, what you can do is actually look at the lower band. Wait for the lower band to be broken. So in this case, let's say you enter over here and you just write the market, right? Just write the trend, and you can see that price has not broken the lower band, which is basically the last 20 days low. So in this case, since it has not broken the 20-day low, you still want to stay in the trade. But what you can do is you can slowly shift your stop loss higher, and maybe put it somewhere around here, and slowly shift it up as the market moves in your favor. So these are the 3 ways you use the Donchian channel. Okay, hopefully this is helpful for you. So as a recap, right, you want to use the Donchian channel to filter out your trade at a glance. Okay, this is not a replacement for the other steps of the equation, such as identifying market structure. Right, you need to use this in tandem. But this Donchian channel is a very good tool to help you identify it. Right, it's not foolproof, but it is a good start. Right, it's kind of like a lifeboat to those who are struggling to identify market condition. Like if let's say you struggle to find out whether it's uptrend, downtrend, consolidation, this tool will help you do just that. Okay, so please make sure you apply this together with the rest of the things that we always say, market structure, price level, entry. Right, you can also use the Donchian channel as an entry trigger over here. Okay, such as this example over here. But please do not just trade every single break of the Donchian channel, right? Be it to the upside or to the downside. Okay, please understand the price context, right? Please understand what I'm trying to say. And lastly, you can use the Donchian channel to manage your trade and trail your stop loss, right? You can either use the average price of the upper band and lower band and throw it below and wait for price to close below the level to exit your trade, or you can use the bottom channel about the lower band to manage your trade. Okay, so if you are more conservative, you want to lock in more profits, then you can lock in at the middle, the average price. If you want to give your trade more room to breathe and you want to ride trend for a longer time, then you can just wait for price to break the lower band. Okay, if not, that's it for this video. Right, as always, if you have any questions, just leave a comment down below. We'd love to help you. Right, thanks for watching. I'll see you in the next video.